Okay, folks, welcome to Thursday Night Stock Charts Live. This is Bob Desmond, and we're going to begin with, I'm late. I am unprepared. I was out in the Hamptons today. I just got in a few minutes ago. I haven't really gotten a feel for how the charts look. I've been working off my phone most of the day and out of the trunk on my laptop, sending out a couple of alerts, but that's about it. It was a nice day, beautiful day, got some sun. Spent some time with my father. He lives in New Jersey. Hamptons, obviously still gorgeous. Beautiful out there. Went all the way out to Montauk. Very, very nice. Good day. But now it's time to get more in tune with how we closed technically. And what I normally do on Thursday nights is spend some time going over the weekly charts. But first, I want to do a quick review of how we closed out the day on a daily basis. Then we'll segue over into the weekly charts. So I'm going to play a little bit of catch up here. And then what we'll do is we'll segue over into some stock chart requests. And we'll take it from there. First, let me say hello to Nestor. Hello. Hi, Bob. Would you like to know your thoughts if a yield will continue to hold banks go up? JP Morgan, yes. As go yields, so go the banks. As long as the S&P 500 holds up, our bank trade finally began to work today. Tommy, hello. Jedi, hello. Jedi, I want to go over your letter tonight. I just walked in moments ago, so I'm late. I want to prepare for it. I don't want to do it half-assed. I'm going to push it to Sunday night. I was out all day long. Bought Facebook 244. Is it a hold? I will go over it for you, no doubt. I'm concerned about Facebook. It was overbought on my screen yesterday. I don't know what it did today, so let me check it out for you. Will, hello. Hey, Bob, waiting for Tesla to pop, and the rest of the market will follow. Yeah, it's kind of canary in the coal mine. Last time I looked, it was up like $85 today. So I have been watching the market, but on my phone, figures coming through. I'm visual. I'm a typical guy. I like visuals. How do the charts look? So the first thing that is concerning, and I've been talking about this all week long, is we need to be careful of yields. Yields on a weekly basis have broken out. So what does well, what does not do well when yields rise? The banks do well. Utilities suffer a little bit initially, but yields are still artificially low. We lightened up there. Technology can become a bit susceptible. Small caps, men's top tier, high growth will do well. The lower quality names will not do well because their business expenses rise. So let's scroll through really quick. Bonds, absolutely and utterly annihilated today. This is the TLT. And again, for those folks just joining in, I'm just playing catch up right now on the day's events. Stokes weak and getting weaker. The VIX, I warned about this last night. I warned on Market Wrap that, and again this morning on Swing Trading Today, you had yesterday, the VIX closed up. What's the big deal, Bob, right? The big deal is that the S&P 500 was up as well. It's not supposed to happen. So what that means is that you had traders out there, while staying long the market, they were putting on big hedges, concerned about volatility. So you could see the VIX rally today. It recaptured support. It didn't hold the gains of the day, but still up net. I want to jump automatically to the S&P 500, which flashed a doji star formation. That's a sign of indecision. How was our volume? Volume rose, but well below average. Let's take a look at the Qs. Down. This is leadership, right? So we have a short position on the Qs. We'll probably look to add to that short position in the coming days. We went into the day short of Salesforce.com, which we opened up yesterday afternoon, late in the day. I want to see how that closed out. Closed up on the day. Wow. 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 Thank God I booked profits. This is a short. It'll probably go higher tomorrow. I will be looking to short Salesforce.com yet again. Why? RSI 86.62. Trading yet again above the third standard deviation Bollinger Band. It's begging to be shorted. So I hope they gap it up higher again. If they drop it back down the next day, I'm going to scalp my profits. I'll do it all over again if they bid it back up again. Let's segue back to the overall averages. I want to check out the transports. Up on the day, up nearly 0.75 percentage point. Now keep in mind what rising yields represent. What the bond market is saying is that, you know what, the economy is maybe not as bad as you might think, and that we need higher yields on our debt, and certain segments of the economy are going to do well in that environment. The transports, if you're seeing signs of growth, not so much the gold names, commodity names, because that's going to keep a lid on that price performance for a while, but not for long, because yields are going to be artificially low for a long, long time. Small caps. They were up on the day, faded a bit. Stokes are weak, down below 50. I'm not trusting this. The banks, we were waiting for this. We got it. We'll be looking to add more to our bank position, because what we were looking for here was a validation. And as I go into the weekly charts, I want to drive a point home that I drive home every Thursday night, so that while we're reviewing the weekly charts, there's one trading day left to go. And from past experience, we know a lot can happen during that trading day that can change the entire look of whatever chart you're looking at on a weekly basis. Yeah, RL, I think that's fair. And we've been expecting that, right? We've been talking about sector rotation. Some sectors that have been setting up well have not followed through. Biotechs. I finally had to get out. I'm done with biotechs. How did that close out today? Off the lows of the day, but $51 per share was our stop point on the LABU. First out, best out. Move to the sidelines. If it breaks out, we'll re-enter. Till then, I'm not fighting it. PSA, public storage, we bought a few days ago. That's doing well. Uranium pulled back a bit. Cal-Maine Foods rallied today. Good stuff. My little egg company, Cal-Maine Foods, little egg company. The banks were long of the leveraged ETF, putting you long of the banks. We're up 4% alone today, a little bit more than that. So let's go to the weekly charts. This is not what I want. I have so many charts open here. This is what I want. Okay. These are completely out of sequence. Why, I'm not sure, but okay. Let's begin first with bonds. All right, so to me, this is the Pimp Mac Daddy chart. This is the number one chart out there. Anthony, hello? BA in talks to buying TikTok. Just kidding. That would be interesting. Good. That was a good one. Alvarado, good one. Danny, you got it, buddy. Okay. So the Pin Back Daddy chart. Yes, please hit that thumbs up button. Thank you for the reminder. If I didn't have the support of my audience, I would forget 90% of the times to say that. I'm a horrible YouTuber. All right, so here's your chart. All right, this speaks volumes. Weekly chart, 10-year yield. We threatened to break out last week. We were rejected. This week, we have blown to highs not seen since June on the 10-year yield. We're still at historically low levels. So you're going to hear people out there, they're going to say, you know, the rally in gold is over, the rally in silver is over, that's done, bull market over. Nonsense. When you go back to the late 1970s and you take a look at yields and gold, silver, they traded like this. Why? You had inflation, a tremendous amount of inflation, and the Federal Reserve was so far behind the curve in raising rates that gold was telling you that the only way to preserve buying power was to own gold, own silver, etc. So we believe that we're in that stagflationary environment, stagnant growth, low, high inflation, and it's only going to get worse. Walmart really is. Did they close that deal, Microsoft and TikTok? I heard there was a 48-hour time frame on that deal. Hi, Bob. Hope you can talk UTSL and Calmain. Thank you. Will do. Yep, Justine. Okay. So the 10-year yield rallying, good for banks. The Dow Transports, this is a daily chart. This is not what I want. Weekly chart. Huge breakout. Huge breakout. Looks like we're going through 11,359 on the transports. Since we were talking about Boeing, I want to see how Boeing did today. Big move. On the week that was. We were up today as well, but we faded on the day. So Boeing to me is becoming interesting. I think it's a seasonality play as well, going into the fall. This is not what I want. I'm going to get rid of this chart here because these are daily charts. Wasting my time. You can see how many charts I go over in any given day. I'm going to open up a fresh round of charts. Weekly. Okay. And yet again, they're out of sequence. I'm really sorry, folks. Okay. Hopefully this works now. This is better. Okay, good. Exactly what I want. All right, so this is the 20-year bond ETF, the TLT 20-year bond. And this is a bad chart. A very bad chart. Lower high on the TLT. And we are now breaking support. 1 day left to go. 1 day matters. But this is a very poor price action. The yield we already spoke about for those just joining. We have a weekly breakout. Tips took it on the chin. This is also going to be a negative for our precious metals, because usually the tips and precious metals trade together. The US dollar, weekly basis, or monthly basis, down on the month. We're going to go to a weekly chart. Not a good week. So I think what the plan is, the longer term, is that our debt to GDP is the highest it's been since the end of World War II. So we used debt to defeat Nazi Germany and Japan. But we came out of it with an industrial complex that was, bar none, the best in the world. Fast forward to where we're at right now, where we have debt, which has been buying back debt, and simply printing money, and a manufacturing base which has been absolutely decimated and exported. So the only way that we as a country are going to be able to repay that debt is through inflating it away. The government, as much as they talk about how they only want to keep inflation at 2%, inflation is going a lot higher, longer term. It's going a lot higher because that's the only way we're going to be able to get out of debt. The problem is that once the inflation genie's out of the bottle, what's the Federal Reserve's next trick? So this is why after the election I'm very nervous about the market and its ability to continue higher, unless of course we begin to see manufacturing jobs come home, organic growth come home. And absent that, I'm very, very worried about this economy. We need to begin to start building things here again. And while I'm confident that the supply chain is going to be eroded in China dramatically, and probably by legislation, I don't think that it's all coming back here. I think it's going to be India, Vietnam, Malaysia, etc., Singapore. VIX weekly chart, a big week. We're up over 8.5% on the week. Oddly enough, so is the S&P 500. This does not bode well. Traders are hedging their bets here. They're worried. And look at volume on the S&P 500. It's dropping off dramatically. The Dow Transports weekly basis, big breakout. The Dow Jones confirming the breakout on the Dow Transports. The IWM small caps, they are up on the week, but certainly underperforming. But I think the story here is good in that it looks like we are beginning to flag out here a bit. We may trade sideways and then break out along with the rest of the market. Again, I think that we're going to begin to see some sector rotation. Sectors that have worked well are going to pull back a bit, probably the trip Qs. Let's check out Microsoft, which has been doing outstanding. Up over 6 1/3% on the week. How are we doing on the day? This is reminiscent of a blow off top. We rallied right up and into the third standard deviation Bollinger Band. What happened? There's no overhead supply above. There are no sellers waiting to get made whole. What you had are traders saying enough is enough. We got to sell here. It's overdone. Look at this volume. You could say it was a big up day. Well, this is a lot of volatility. We were down on the day, up on the day. A lot of backing and filling, but we can't ignore the fact that we saw a tremendous amount of selling today on Microsoft. Look at this. Possible lower high, 15-minute chart. We break down below 224 spot 23. Microsoft's going a lot lower. The banks, we are up nearly 4% on the week. We're along with the FAS, the leveraged ETF. That is up 4% on the day. What are we up on the week? We're up 10% on this trade this week. While I like the week, we haven't broken above. Where do we close out? We haven't broken above this prior high. So I'm not going to sit here saying, you know what, you got to go running out tomorrow and buying banks with reckless abandon. I'm optimistic But I do believe that we're going to pull back and retest the support. If not next week, the following week. I still like the banks, assuming that yields continue to hold that breakout that we just went over. Absent that, if that breakout fails, I'll probably be bailing on the banks. I don't think that's going to happen, though. Technology, weekly chart, up over 3.5% thus far on the week. Volume is a concern. Volume is dropping off. Daily chart. Filled candlestick on the day. It didn't mean anything back here, but generally when you see filled candlesticks, it's a sign of indecision, so just like a doji star formation, and you may get a trend reversal. May not happen immediately. This is a leadership sector, so it's got to be given the respect it deserves. So while I wouldn't go shorting it quite yet, it's setting up as a short. Not a bet that it's going to crash and go to zero, just for a scalp. Get in, get out. Semis, topping out. Clearly topping out here. Topping action here. Doji star here. Filled candlestick here. Another doji here. Look at this volume. This is a tell, folks. That's a tell. Beware. Biotechs. Not a good week. Broke down below support. I stopped out of biotechs today. And the reason was this. Right? So if you take a look at the LABU daily chart, we had a bullish key reversal here. Very nice day. We should have seen a rally. It didn't happen. It broke down. We had a breakout back here, which is the reason why we were interested in LABU, but that breakout subsequently failed, and we broke down below support level. We're out. Done. It's not working. Energy. Weak. And oil has been up. It's up on the week, over 1.5%. Yet energy can't catch a bid. Let's take a look at the daily chart. I'm wondering whether or not there's an opportunity here. We reversed off the lows of the day. What was the low of the day? I think we could still go lower here. So I'm not interested in energy just yet. Healthcare overall was up, getting ready to break out. So maybe we'll take some of the funds that we took out of the biotech sector, rotate into areas that are working. Healthcare is working. Biotechs are not working. Why is healthcare working? It's working because where is there inflation? Healthcare. If you take a look at the inflation data, you're seeing it in rentals. You're seeing it in healthcare. You saw home prices, existing home prices, surge to the highest in over 10 years this past week. So inflation is out there. You want to take a look at where else there's inflation. Look no further than agriculture. Agriculture, this is the DBA, up 3% on the month. Not a big move, but what's important here is that we've stopped going down. We're now beginning to put in higher lows, no higher highs yet. This is not an aggressive buy right here, right now. We have a strategy for getting long. We're not there yet. And we may even pull back on the day. Let me see what we did today. Well, it was up. It was up 18 cents. Really good day. Bullish reversal bar. All right, so we did oil. Emerging markets up on the week. They faded a bit. I'm cautious. Rising yields can act as a little bit of a headwind for emerging markets. And I'll stay long of emerging markets as long as the dollar is weak. If the dollar manages, for whatever reason, to gain strength, then we'll have to exit the emerging market trade. Right now, I still like it. Gold. Rough week. Down nearly 20 bucks on the day. We closed down below this lower band of support. So I would love to say, you know what, this pullback should be bought. You know, I'm not of that school quite yet. I don't want to say that. And I was buying gold miners earlier in the week and silver. But we didn't go rushing back in and buying hand over fist. The GDXJ was still up on the week here, slightly. Daily chart. We held support. I like the fact that we're putting in, let's annotate this so I could illustrate what I'm talking about here. What I look for on Stokes is this. I want to see a higher low. I want to see a breakout. We're beginning to see that. Am I ready to go buying more gold mining shares right now? No. No, not right now. Now, keep in mind that while yields may act as a headwind short term for gold, silver, etc., longer term, keep in mind that yields are at ridiculously low levels historically. So at some point in time, traders are going to realize, you know what, inflation's on the way. Yields may be going up. They're nowhere near historic highs. And the last time we saw, think about this, yields historically on a 10-year bond going back in history, roughly about 5%, give or take a point. The last time the market really began to buckle was when yields, this is beside the COVID sell-off, was when yields were up at around 2%. Behind price. I'm going to overlay the S&P 500 here with yields. All right, so you can see that yields can press higher along with the stock market. Just because the yields press up higher doesn't mean you're going to get a correction. But there comes a point where yields are moving up too high, and all of a sudden the stock market buckles. And right back here, this is when you had the Fed saying the roll-off of debt off of our balance sheet is on autopilot, and yields kept going higher. That's like a rate increase. And so we got up to around 2%, 2.13 back here. The stock market started rolling over. Back here, we got up to 1.93. The stock market started rolling over. So the stock market can't handle yields at above 2% or else it starts to buckle. And you could argue that it's probably now, with all the more debt that we have now versus 2018, 2019, you could argue that threshold of where rates can go to before the stock market buckles, maybe at what, 7%, 1.7%, 1.75, 1.8, who knows? The market's going to tell us when enough is enough. But to think that we're going back to 5% anytime soon is ridiculous. Because if we do, you're going to see a stock market crash like you've never seen before. Unless, of course, we have manufacturing that comes back in. We're building things. We're growing organically. We're not seeing that right now. Hell, the country isn't even open. I digress. Utilities. Let's talk about utilities. I was asked about that. We're holding weekly support. We lightened up here a bit. The problem is with utilities is that the utilities are capital intensive. What do they need to do? Your typical utility needs to issue bonds. What do they do with that bond money? They expand facility. They maintain the facilities. So they're viewed as a higher credit risk than what are treasuries. So they compete with treasuries. So if yields on treasuries move up higher, what happens to the yield on utility debt? It's got to go up higher as well. So you have people out there that aren't paying the utility bills. That's why the utilities haven't rallied with yields this low. Now you have yields going up higher. People still aren't paying their utility bills. And the cost for financing their debt is going up higher as well. So we had to lighten up here on the utility trade until we see signs that the consumer is beginning to stabilize. Rents are being paid. Mortgages are being paid. Loan loss reserves at banks are becoming lower. And utilities can then begin to move up higher. So we're cautious here. Daily chart, let's see how we close out the day. We're up on the day. I'm not ready to go adding more here right now. If we see a breakout, okay. But right now I would stay very small. If you wanted to initiate a position, I'd be fine with that. Use a stop loss right below $22 per share on the UTSL. This is a leveraged ETF. If you don't want the volatility of a leveraged ETF, simply use the XLU. Far less volatility. And what was the other one? Cal-Maine Foods? Right? Cal-Maine Foods? I believe. I'm going with it anyway. Cal-Maine Foods is, we're long of it. This is our little egg company. We're long of it. They announced a secondary offering last week, 6 million shares. You see the big sell-off. We bought more down here. I like it. Not for the daily chart, not for the weekly chart. I like it for the quarterly chart. This is what we like, the higher level view here. When was the last time anybody on CNBC was talking about the quarterly chart is looking like this? Nobody. Not even, what's his name? What happened to like the blonde-haired guy? I can't believe I forgot his name. We'll follow him on Twitter too. It'll hit me later on. Anyway, we broke out on a quarterly basis back in April, the April quarter. We're pulling back now, doing a retest. I think we're going to rally off of this support level, and I think we're going a lot higher. Why? What's the trade here? Inflation. Agriculture's moving up higher. Food prices moving up higher. The little egg company that could is probably going to break out a lot higher. So while short term, they're going to have to absorb, the market's going to have to absorb the initial shares. We moved up higher today. We faded a bit. I would be a buyer on a rally up and through $43 per share. If we close there, spend a day or two above that mark, I'd look to add more. I like it. I'm staying long of it, not for the daily chart, not for the weekly chart, not for the monthly chart, but for the quarterly chart. What else do we have? Let's go to some stock chart requests. So in short, I think we're seeing sector rotation. While yes, we have a short trade on, it's on the triple Qs. I think they're going to take a rest. We'll be looking to short CRM yet again. For those just joining in, we shorted it yesterday, closed it out this morning. Also, we shorted out early in the week. You can see we're doing a lot more shorting of late. Shorting, scalp, contrarian trades, in and out. Best Buy, how did that do today? We shorted here with RSI near 90. We booked those profits pre-market, and you can see it's still weakening up here. I'm not looking to reshort Best Buy. Somebody had asked about Facebook earlier. Let's go to the top of my list here. I want to make sure I don't miss anybody. Nestor, we'll talk about JP Morgan for you, okay? So let's go to TrendSpider. I also want to talk about the Boeing trade. I spoke about it this morning. Let's go to JPM first. And the tool I want to begin to use a little bit more often is a tool that TrendSpider, and by the way, this is charting software I'm using right here. It's the next generation of automated technical analysis. If you don't know how to use trend lines or you want to validate that your trend lines are accurate, simply press a button. What I like to do is I like to manually draw. I go like this. I'll do them all over the place, like back here. And then you click a button right here. And all of a sudden, those trend lines pop up for you. I call it my spell check for technical analysis. On a daily chart, I can overlay, and you're not going to get this anywhere else. I can either overlay a weekly chart or a monthly chart. I mean, not a chart. Support and resistance levels on top of a daily chart. So, JP Morgan, I'm looking at a daily chart, but what if I want to see where there's weekly support and resistance? Let's take off the daily trend lines. Click a button. Oh, look at this. Ain't this interesting? Look at what we are breaking out above. Weekly resistance. And we're also breaking out above this volume shelf. This is volume by price. JP Morgan's looking really good here. And I want to go to seasonality, which is a tool that TrendSpider just added on. If you're interested in this charting software, use the link below. 35% off, the cheapest price on the web. Seasonality for JP Morgan for August is up, out of the past 14 years, 47% of the time, but going into September, it's up 71% of the time. Great data to have at your disposal. So JP Morgan looking good here, especially with yields rising. Monthly chart. Not much going on here. A lot of topping action, a lot of resistance in here. Congestion. Not loving the monthly chart. Weekly chart. You can see I drew this line here. This is a manually drawn line. And we had seen this act as resistance for several months. Going back here, through here. Now it's acting as support, which is good to see. Let's see whether or not we close out the week above 98.77. We probably will. I am liking the RSI, higher lows. We have a breakout on RSI. JP Morgan looking good here. Now what we're looking for is a consolidation on JP Morgan. And then a breakout above this resistance level here at around, let's call it 101 thereabouts. But keep in mind, you have a ton, as noted by these volume shelves, a ton of overhead supply here. So the play here would be, be careful. Build that position on strength, on increments. Nibble, nibble, nibble. Because you have a ton of overhead supply. I see no compelling reason to go jumping in with both feet tomorrow. But it's looking good. It's looking constructive. And let's face it, the banks have been directionless these past several months. But now they're showing signs of life as yields begin to break out. So JP Morgan looking interesting as a long. What do we have up next? Tesla. Monster. Monthly chart. I know there's a lot of Tesla lovers out there, and believe me, I'm an Elon Musk fan, but I'm telling you, this is not going to end well. We are so far extended beyond the upper band of the third standard deviation Bollinger Band, it's maddening. But I still don't know whether or not I would short it, because it's on a monthly basis. On a weekly basis, the chart's saying we can go higher. Daily chart, up over 2.5% on the day. We saw a bit of a fade, but we can go higher. There's no overhead supply above. No buyers looking to get made whole. So while the monthly chart's very extended and it's not going to end well, would I go shorting it right here, right now, based upon a daily entry? Nope. Not with my money. I think it's still head higher. Path of least resistance remains up. Well, I'm going back to your question to see if I answered it. Waiting for Tesla to pop and the rest of the market to follow. All right, so yeah, you're betting that it's a canary in a coal mine and that the rest of the market will pull back, quite possibly. Denny, 3D. Recovery play, huh? All right, let's check this out. I don't like it as a long. I think it's going to retest support, but there is support below, so I wouldn't short it. Stokes are rolling over, lower highs. Daily, weekly chart. Have we made a new weekly low? Low 5.22. No new weekly low. I think that's the best I could say anything about it. We're barely holding on to a support level. You know, if you buy it, you need to use a stop loss right below the lows of last week. But I would not short it quite yet. And before I shorted it, I want to see what the short interest is. If it's very high short interest, I wouldn't short it at all. Daily chart. We broke support today. But we bounced off of another support level. What does seasonality say? August is usually up 52%. It rises in September. It's certainly not up this month. I don't like to trade to the long side or to the short side. There's no compelling reason. I think that there's a good chance that we could break lower. If we don't, let's see another retest of this support level down here. Let's watch for a bullish key reversal and a reversal on strength, strong volume. And then it may become interesting. Right now, it's the path is still to the downside. I wouldn't be interested in it. Facebook. Pulled back today. I wanted to short it. Looks like I'm not going to get my chance. All right, so monthly chart. We're still above the third standard deviation Bollinger Band. Monster month. But you can see here, this is the value of the automated trend lines. Take this off. And if you're staring at this, wondering whether or not you should buy it, click a button. And automatically, it's telling you avoid like the plague. Because you have stiff resistance above. I think that we could easily pull back and do a retest on a correction. I would be interested on a retest of support at this level here. It's rising, so it's going to change. So I don't want to throw out a number. So our alert is set. We'll keep it active for the next 10 days. Set it and forget it. Daily chart. Now, we closed out the day. I spoke about this chart this morning on Swing Trading Today. We closed out the day above the third standard deviation Bollinger Band. I wanted to push it up higher, so our risk reward was more in our favor. Didn't get the opportunity. They gapped it down. So no great shock. I think we pull back even further on Facebook. I would not initiate a new short, though. I would just let it correct and let it come to you. Let's take a look at what else do we have? We did Facebook, 3D. Let's talk about Boeing for a second. Boeing is a very interesting trade. Now, the reason why I'm focusing more on Boeing of late is for a couple of reasons. One, we're in a tight consolidation range. Two, the durable goods order that came out the other day was very, very hot. If you dig down into the data, a lot of it was military spending. We're spending a ton on drones, aircraft. Who makes drones and aircraft? Boeing. So they're never going out of business. We'll never let that happen. So Boeing is looking interesting from a technical perspective. It was rejected today. Our alert did not fire off because it didn't spend enough time above our resistance level. I wanted it to pull back down here, but it appears as though we're not going to get that opportunity. Higher lows. And if you take a look at seasonality on Boeing going out and into September, it's up nearly 80% of the time, 79% of the time over the past 14 years. So that's strong data. So Boeing is definitely one that we're watching as a potential long. We're just looking for either a bullish key reversal bar off of support or a breakout, which we have our alerts set up here. And we'll be ready to pull the trigger on Boeing when the market says it's right. AMD, bear country below trend line. All right, Oliver. I haven't been watching it. I'm scratching this because I have sunburn. If you're wondering, why is he scratching himself? I have sunburn. I know, Pat. I gotta get it fixed. I don't know what the heck is going on. My bandwidth is good too right now. All right, so monthly chart, we're seeing a fade here. This is jumping out at me. Seasonality up only 36% of the time over the past 14 years in the month of September. Weekly chart. We're holding a breakout here on a weekly basis. You know, would I go buying it? Probably not. If we pull back further next week and did a retest, you know, maybe I would nibble and put a stop loss right below. I wouldn't base my trading decisions solely on seasonality by no stretch of the imagination. I don't like the price action today or yesterday. I would wait to see whether or not we hold this support level, either this one here, the breakout point, or this one down here. If it fails, you're going a lot lower. That's a breakout point failure. And take note of RSI, lower highs, and now we're showing signs of a crack to lower lows. Beware here. And remember, the semiconductor sector, which we went over earlier, is beginning to show signs of topping action as well. So just beware here. We're seeing some chinks in the armor, which I think you already picked up on, Oliver, so good for you. Microsoft. That's the wrong chart. Morgan Stanley, I haven't looked at it in a while. You know what? Let me just take a quick peek at Morgan. Consolidating nicely. Good day today. I think it's going to break out. I like Morgan Stanley. Let's pull back here. very close to a breakout on a weekly basis. Let's overlay some monthly trend lines. You have resistance on a monthly basis up here at around 56 bucks per share. Let's throw on those monthly trend or weekly trend lines. I want to see a close above this weekly resistance. And we'll keep it active for the next several days. I like Morgan. Morgan's looking good. On a breakout. All right, MSFT. I already kind of went over Microsoft earlier. I think it's very overbought on a quarterly, yearly, monthly basis. And if it goes, it's going to take the trip Qs down with it. Why? It's the largest component. Now, taking a look at it from a weekly view, I mean, you got to love the RSI. Nice W formation, hooking up, higher lows. We are at the top of a trading range. In fact, we are above the top of the trading range, but we're beginning to fade here a little bit. Let's go to a daily chart. We rallied through the third standard deviation Bollinger Band today. We were rejected. Does that mean it can't go higher tomorrow? No, it can. We rallied off the lows of the day today. I know there was big volume on the day. Raindrop chart. Ha, knew it. This is a sign of indecision. Whenever you get these blue raindrops, it's like a doji formation, as noted back here. Last time we saw this, what happened? We pulled back. You saw it back here. After a pullback, we rallied. Saw it back here, we pulled back. So you get my meaning. It's a sign of an inflection point. So whether it be to the upside or the downside. So I think that odds are beginning to turn against the bulls a bit here. Not a bad close. We closed with some decent volume at the close, but we closed well off the highs of the day. So I'd be very cautious here. I wouldn't initiate a new trade. I think that, going back to what's stuck in the back of my mind, even if you use a quarterly chart. RSI, quarterly basis, 93.14. Yearly basis, 93.96. And trading above the third standard deviation Bollinger Band. I sound like a broken record. Every time I talk about Microsoft, I talk about this chart, and it keeps going higher. So would I go shorting it here? No, I wouldn't. Not quite yet. Not yet. Let's check out seasonality. Up 72% over the past 14 years in the month of August. Up 64%, still respectable in the month of September. And it rises in October. So maybe we'll take a pause in September, rise in October. I think we are going to get a correction in the Trip Q names. If Microsoft goes, so goes the Trip Qs. And no, I'm not betting on a collapse or anything like that. Not until after the election. Then all bets are off. Yeah, Pat's been killing it with the puts on the SPY. What happens to Apple and Tesla after the split craze? I think that the splits, that's a blow off top. It's reminiscent to me of the dot-com bubble. You had a bunch of companies splitting. Dell, because their earnings were coming in. And they were one-trick ponies. They split their stock and everybody excited. And you all know what happened in March 2000. That was it. Top of the market. Let's take a few more symbols. I got to go to my request tab to make sure I captured everybody's request. I didn't. Roger. AYX. YX. This is a 4-hour chart, but interesting. Good day today. Let's go back to candlesticks. Let's go high level. Oof. Monthly chart, ruthless. But this is what happened. I say this all the time. When you get an overbought condition, you could see last month we were trading above the third standard deviation Bollinger Band by a mile. It doesn't end well. What happened? It didn't end well. What was the high last month? 185.75. What was the low of this month? 106.51. Could you imagine being a poor son of a gun that bought up here? Crazy. Respected the Bollinger Bands, the third standard deviation Bollinger Band in particular. Weekly chart. So, not bad. Not bad. Beautiful bounce. I would like to see a retest of 116.95 next week. Using a stop loss right below there. That would be a good entry point. Now keep in mind, let's throw over some trend lines here. Where do we have resistance? Not much. Let's overlay monthly. Not coming up with much, but I see resistance levels. Let's manually draw them. Right here. 128.19 was support back here. It's now going to act as resistance. So I'd really like to see a retest of the support level. That way you have a good running start at this resistance level at 128.19. If you buy it here, where it closed out on the day at, where it closed, 125.19, you don't have that much upside before you hit resistance. So the other way to play it is to wait for a breakout. If we close the week out above 129.19, next week we break out, touch, bounce. I'm going to click twice here. So if it breaks out, it doesn't cancel out the alert. I could wait for the retest next week. So if you wanted to play the nibble, nibble, nibble game, which is the wise game, it's to do this. Wait for the pullback of support, 116.95, nibble there. Open up your position with a stop loss right below. If it manages to close above 128.19, add more. So on and so forth. And you have more resistance levels up there, but you get my drift. Daily chart. Good day today. A little bit of declining resistance here. We couldn't close above it. Actually, anchored volume-weighted moving average. We have our support and resistance levels here, so we're good to go. We know where we want to get in. We know where we want to get long and add. So it's a good-looking chart. It's setting up nicely, and it really, if you watch this last month and you show the discipline not to buy it above the third standard deviation Bollinger Band, pat yourself on the back. You earned it. I mean, waiting saved you a ton of not just money, forget the money, anxiety, and it builds your confidence. What else do we have? TEAM, also for Roger. Good looking chart. But again, let's go high level. Monthly chart first. I like it. You have two resistance levels here. I think if you close above 191.02, you could nibble very small because you have resistance at 198.29. If you pull back to 174.48, as we did back here twice, it's not unheard of. That would be a very attractive support level to get long at. I'm sorry about the echo, folks. Pat, I think I need to get a new microphone. Hopefully that fixes it. These microphones are expensive. All right, what else do we have here? Oh, let's go down to a weekly chart. Nice week. I mean, wow. Very nice week. Hopefully you're long. Beautiful breakout. I would still stick with the same methodology for adding or opening a position. Stokes are beginning to flatten out and hook up. Let's check out seasonality. There's only 5 years worth of data here. So be made aware of that. August is up only 40% of the times. It doesn't get much better, but it does get better in September. October is doom and gloom month. Up only 25% of the times. So just beware. Daily chart. A good day, but again, we want to stick with our logic for entering the trade. Were I long, I would remain long. I wouldn't go adding more. I would wait for a breakout here. And we'll keep this active for next 6 days. So set it and forget it. I'm not going to think about this stock or any other stock until one of these alerts fires off. That's all I care about. By using your alerts, you avoid impulse buying. So please use your alerts. Okay, what else do we have here? XOM. Carter Worth. Thank you, Anthony. Carter Worth. I'm a big fan of Carter Worth. I wasn't knocking them earlier. I happen to like them. Wow. This is a brutal chart. Could be a seasonality trade. A multi-month seasonality trade. I'll go to that in a moment. So let's toy with it. Let's war game it. What we want to do here with XOM, which is just absolutely hated. Let's take our crayon out. We need to stop going down. We have not yet done that. Let's get rid of this. We are not technically at support. We're hoping that the lows of this month, which we're close to at current, will be the lows of the month. We have support down here at, can you believe this? $36 a share for ExxonMobil. Once the largest capitalized company in the world. Let's do this. All right, so we know the macro picture here is not rosy. Do we have a bottom? We don't know. We got to drill down. But if we were to close out the month, as we're looking right now, the probability statistically of us moving lower is very, very high. I like 36 bucks per share. Where do we close out the day? 39.71. Let's face it, oil moved up higher this week, and energy did not. So there's a divergence going on there, and we don't know when it's going to end. So let's assume it's going to go on for a while longer until they begin to trade in correlation yet again. So let's overlay some automated trend lines to see if I missed anything. Nothing. Surprising. Oh, we have some resistance up here, but nothing down here. Oh, there we go. It just popped up. All right, so let's war game it this way. Let's create an alert on XOM. I want to keep my sensitivity very low because I only care about a clean breakout. I'm going to keep this active for the next 20 days because I'm interested. Our alert is set. I want to create another alert down here at $36 per share. Now, if this fails to hold, Exxon's going a lot lower. Into the 20s. So here's our consolidation range. If we retest support and it holds, we open a position. If at a certain time we begin to break out above resistance, we add more to the trade. Now, what I like here, before I drill down to the weekly chart, is take a look at your seasonality. You can see the moving average here. August is usually a garbage month for XOM, up over the past 14 years, only 20% of the time. However, it changes and improves going into the autumn and winter months. We could jump up to 50%, which is not great, but much better than August 20%. And the trend continues, up 57% of the time in October, November, December. Weekly chart. The weekly chart is not pretty. I think we're heading down here to 36 bucks a share. Daily chart. A lot of resistance up here at this volume shelf. I would wait for 36 bucks a share. I think that's where we're going to go. Let's check out a 4-hour chart. Not a bad back half of the day, but we're talking about a macro trade here based upon monthly observations. So a 4-hour chart has very, very little in terms of influence on what we want to do here. We're focused on these alerts being set and triggered, one or both. I'm not interested until then, unless something miraculous happens. But the seasonality trade is very attractive. I went over BA, Barun, hello. All right, we'll leave off with, hey Franklin, how you doing, buddy? We'll leave off with Max, Nvda, and Bitcoin. All right, let's go to Nvda first. Now keep in mind, we went over the semiconductor sector earlier, and it's showing signs of stalling out on a daily basis. Monthly chart first. Beautiful month. All-time highs, no overhead supply. No reason to sell, definitely no reason to short. Weekly chart. Off the highs of the week, we have put in a new weekly high. Can it move higher? Absolutely. It's Nvda. Let's check out seasonality rankings. August up 87%. Well, lived up to that, didn't it? September, still a very good score of 71% up over the past 14 years. It drops down measurably in October, but still better than a 50% odds of being up. Just a powerful, powerful stock. I mean, looks like January is the worst time to own it. Daily chart. New daily low today. We already have an alert set here. We're waiting for the support level to fire off, get hit, tested. What I'd also be interested in is this. A breakout. Let's remove this. Go straight. A breakout above resistance. So our two alerts are set. I care about a retest of support down here or a breakout up here or a mixture of both. Either works fine, but until then, we don't care. We're not going to touch it until it breaks out or pulls back. One of the two. Bitcoin. All right, so we're down a week. I still like the 10,000 mark as an entry point. Remember that we spent a lot of time fighting through these resistance levels, and we just cut right through. We crashed up through the 10,000 mark, which is pretty stiff resistance, like a hot knife through butter. It's worthy of a retest. So I like it down there. Would I buy it here? It may hold 11,000. Where do we close? 11,310. Daily chart. It's weak. RSI is very weak. Stokes are very weak. While it appears as though we're stabilizing here, would I be a bit surprised to see us break down further? No. I would not buy Bitcoin until we begin to correct here on these Stokes. Begin to hook back up, gain some momentum to the upside. Be careful here. This bottoming action can lure you in thinking that, you know what, Stokes are becoming oversold. Some of the worst damage to a stock, commodity, ETF, cupcakes, whatever you're charting out here, some of the worst damage that can be done to a stock, whatever, is when Stokes are trading down below 20, because they could stay down below 20. So please be very careful here. I would not buy Bitcoin. I like 10,000 though. Let's go to Max. We'll leave off with that. Is this the right? No, this is not the right chart. It's not coming up here. What is Max? I don't know what that is. Is that a symbol? Oh, Oh, maybe you were just trying to imply something. Maybe I misread that. All right, so that wasn't a request. My bad. UNG, you got it, Tommy. We'll leave off with the UNG. And if I could ask you folks to smash the like button, please, I'd really appreciate it. And for those that have in the past clicked the notification bell, I've been told that they haven't been getting the notifications. But one of our members, Franklin, told me that it could be because YouTube doesn't update and it knocks off some of the alerts. So there's a link below. Enter your email address. You get alerted 15 minutes to a half hour before I go live. Didn't happen today because I was a little bit late. But normally it's out 15 minutes to a half hour before I go live. UNG, Nat Gas. Let's go with a weekly chart first. Very nice. Bullish reversal bar. New weekly high on the week. We're trading above resistance at 14.29, which is good to actually, we could lift this up a little bit. 14.29 is reasonable. Let's raise the bar a bit. Let's just say we're trading at resistance. A close above 14.51 would be attractive. Let's pull back to a monthly chart out of curiosity. Yeah. A lot of resistance above. A ton of it. Yeah, more at 1571. The game plan here would be is as we break above. As a matter of fact, Tommy, I'm going to take this and I'm going to go to I'm going to place this in the chat. You may want to keep these prices for future reference. Because I would stay very, very small here. Nat gas is very volatile. If we close above 14.51, nibble. If we close above 15.71, nibble a little bit more. So on and so forth. And then we'll revisit it. I like the chart. I think it's setting up. I think we've turned a corner on nat gas, which has been on a long-term secular downtrend. You bet, Tommy. We'll revisit it, Tommy. So we'll update it as time goes by. Daily chart, yeah, right smack dab, up and into that resistance level. And you note this volume shelf here. But the chart overall looks good. It's a solid chart. It's an early recovery play. Early recovery plays, we're very, very disciplined. We nibble, nibble, nibble. We want to make sure that bear market it's been in is over. We want to see higher lows and higher highs. So UNG we're constructive on. Not overly bullish, but we're constructive on longer term. All right, TA and David. All right, INTC and SQ, and then I'm going to sign off because I'm beat. INTC. We haven't looked at this one since AMD's earnings. And it is a disaster area. Monthly chart is, there's no the only thing good I have to say about Intel is that we haven't put in a new monthly low. But with the semis weakening up now, topping out a little bit, the first one that's going to fade is Intel. Lower highs on Stokes, not only lower highs, but now lower lows. We've moved off the highs of the month. Weekly chart. Let's clear all this up. Let's take off the automated trend lines for a moment. Let's remove okay. Let's start fresh. We'll keep this one here. We broke out this week above resistance. Our alert never got triggered. So it's nice that it broke out. Does it stay there? That's the question. So we need to see it close this week above this resistance level, and we need to pull back and retest support. I would be very, very deliberate and patient, because you could make the argument that what we're seeing here is simply a dead cat bounce. And if we fail, we're going a lot lower. We need to hold this lower band of support. If that fails, we're going down. So it's good that we broke out on the week. We must close above resistance right here. Daily chart. Not a good day. In fact, it was an outside reversal day. Again, I'm going to take my crayon out and say we break down below the support level. In all probability, we're going lower. Watch the SMH, the semiconductor ETF. If that goes, Intel's going. So be very, very careful here. Square. Overbought. You know, it for 3 consecutive months now, we've closed out the month above the third standard deviation Bollinger Band. The probability of this happening statistically is very low. It's very low. To expect that we're going to do this again next month, I don't know what the odds are, but it's not that high. Let's drill down to a weekly chart. Not a bad chart. We have put in a new weekly high. But we faded a bit. This seasonality only goes back 5 years here, so keep that in mind. Seasonality improves in September to 75% versus 60% in August. But keep in mind, the past 5 years, where have we been trading on a monthly basis relative to the third standard deviation Bollinger Band? You know, this is an anomaly. Be very, very careful here. This is not going to end well. Daily chart. We've been flirting with a breakout. We keep getting rejected. Bearish key reversal bar today. I wouldn't short this stock by any stretch of the imagination. I wouldn't go buying it. If we break out and you're considering buying it, I would keep a very, very tight stop loss. Very tight. Below, let's set this up. I'll tell you the figure. And the only reason I'm entertaining even thinking about buying the stock would be that your small caps are setting up nicely, right? They had a fairly good, decent day today. This is a high-quality small cap play. Watch for a breakout above 160.39, stop loss right below it. Because if we close above it and then fail to hold it and break back down, it's over. That's the market sending you a signal. It just doesn't have the rocket fuel anymore. So I would get out very, very quickly, and I would stay small on that opening trade. And with that, folks, please smash the like button. Thanks for joining. Share with a friend. And everybody have a great remainder of your trading week. I hope it's profitable. And have a great weekend. Be well.